and gentlemen, and welcome to the Q2FY23 earnings conference call of Tube Investments hosted by IIFL Securities Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand over the conference to Mr. Anupam Gupta from IIFL Securities Limited. Thank you, and over to you, Mr. Gupta.
Yeah, thanks, Michelle, and welcome everyone to Tube Investments 2Q23 conference call. From the management, we'll have Mr. Vellayan Subbiah, the Executive Vice Chairman. Mr. Arun Murugappan, who will join us in a bit, who is the chairman. Mr. Mukesh Ahuja, the managing director, is already connected. Mr. Meyyappan, who has taken over as the CFO for the company. Mr. K.R. Srinivasan, who heads the metals form business, and Mr. K.K. Paul, heading the TI cycle business. We also have Mr. Murli, who heads the engineering business for TI, and a few other members. I'll hand over to the management for the opening comments, post which we can have a Q&A. Over to the management.
Yeah, thank you, Anupam. Good morning, everybody. Mukesh Ahuja this side. Just to share with the commentary of Q2, the Board of Directors of Tube Investment of India Limited met on 4th November and approved the financial results as follows. Standalone result for the quarter. Revenue in Q2 was at rupees 1906 crores compared to 1667 crore of the same period previous year. PBT after exceptional item was at 202 crore as against 164 crore in the same period previous year. Exceptional item of 23.45 crore represent impairment provision in respect of investments made in Sri Lankan subsidiaries due to the current market condition and ongoing economic crisis. ROIC analyzed at 56% for the quarter ended 30th September 2022 compared with 48% in the previous year same period. Free cash flow for the quarter was at 119 crores. Details of the businesses. Engineering. The revenue for the quarter was at 1192 crore compared with 1027 crore in the corresponding quarter of the previous year. Profit before interest and tax for the quarter was at 165 crore against 102 crore in the corresponding quarter of the previous year. Metal form products. The revenue for the quarter was at 371 crore compared with 328 crores in the corresponding quarter of the previous year. Profit before interest and tax for the quarter was at rupees 48 crore against rupees 39 crore in the corresponding quarter of the previous year. Mobility division. The division has a registered revenue of 226 crore during the quarter compared with 262 crore in the corresponding quarter of the previous year. Profit before interest and tax for the quarter was at 10 crore compared to the 20 crore in the corresponding quarter of the previous year. And other businesses, the revenue for the quarter was at 188 crores compared to 120 crore in the corresponding quarter of the previous year. Profit before interest and tax for the quarter was at 8 crores against 12 crores in the corresponding quarter of the previous year. During the quarter, the company acquired a 76% equity stake in Moshine Electronics Private Limited on 23rd September 2022. Moshine is company engaged in the manufacturing of camera modules for mobile phones. As a part of its strategy to pursue opportunities in clean mobility, the company subsidiary TI Clean Mobility Private Limited acquired a 65.2% equity stake in IPLT on 21st September 2022. IPLT is the manufacturer of electric heavy commercial vehicles. Consolidated results. TI's consolidated revenue for the quarter was 3789 crore as against 3263 crore in the corresponding quarter of the previous year. Profit before associate joint venture exceptional items and tax for the quarter was at 439 crores as against 294 crores in the corresponding quarter of the previous year. CG Power and Industrial Solutions, a subsidiary where company holds 58.05% stake, registered a consolidated revenue of 1707 crore during the quarter as against 1469 crore in the corresponding quarter of the previous year. Profit before tax for the quarter was at 241 crore as against 144 crore in the corresponding quarter of the previous year. Shanti Gears, a subsidiary company in gears business, in which company holds 70.47% stake, registered revenue of 109 crore during the quarter as against 72 crore in the corresponding quarter of the previous year. Profit before tax for the quarter was 23 crore as against 7 crore in the corresponding quarter of the previous year. Commenting on the financial results, Mr. M.A.M. Arunachalam, known as Mr. Arun Murugappan, Chairman Tube Investment India. The result of the company reflects the stability of its businesses, delivering strong result of the wake of continuing economic challenges via high inflation and looming recession globally. Engineering, metal forming products and industrial chain division performed very well in the domestic market but faced challenges in its exports business. Mobility division has lower profit due to shrinking of volume in the industry. The company expanded its footprint in the clean mobility ventures through acquisition of IPLT, a manufacturer of electric heavy commercial vehicle trucks, through TI Clean Mobility Private Limited. The quarter was witnessed a commercial launch of the electric three-wheeler in September 2022. The performance of the subsidiary CG Power Industry and Shanti Gears is consistent, delivering strong performance and profitability across the segment. Thank you.
Yes, so with that, we'll be happy to turn it over and take Q&A.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may please press star and one on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Jinesh Gandhi from Motilal Oswal Financial Services. Please go ahead.
Hi, sir. A couple of questions from my side. One is on the engineering business. Are we seeing any moderation trend on the export side, like many of our peers are witnessing, or exports continue to do very well?
Yeah, Murali, would like to take this question?
On the export side, because of subdued demand and the stock pile-up, it is all the customers are trying to liquidate the stock and they are correcting the stock. And we hope in the coming quarters the demand will pick up and revive back once the stock has come to a normal level.
Okay. And also at a broader engineering and metal form business, have we started to see moderation in commodity prices for us and in turn pass-through of that happening to customers, or that is we are yet to see that phenomena?
Mukesh, you would like to answer?
Yeah, commodity, like you rightly said, commodity prices are softening, and as you are already aware, we have arrangement with all the customers on the increase as well as decrease. We have a fair amount of agreements in place, so that will be concluded accordingly.
Okay, so this quarter we would have seen some moderation in growth also because of commodity prices pass through, right?
Those commodity prices softening trend has just started. Maybe we have yet to see the phenomena of price reductions taking place. I am sure maybe coming quarters we'll see that, and then we'll settle it with the customers as well as suppliers accordingly. Got
it. And thirdly, with respect to the export business, given that rupee has been depreciating, are we seeing benefit of that, and that is the reason why our margins in engineering business and metal form business have expanded materially? Is that the only or the major driver of margin expansion?
Margin expansion in engineering businesses, there was pending settlement with the customers as well as suppliers. So one time settlement has happened for this quarter, and we see that maybe margins has gone up in the engineering business as well as MFPD. But on steady state basis, whatever margins we are taking, that will continue in future also.
Okay. And was there any benefit of currency as well in this quarter, or that will again in coming quarters?
We couldn't hear you, Dinesh.
Sorry, was there any benefit of weaker rupee in this quarter, or do you expect that to come in coming quarter?
So that is surely going to, like Murli said, that weakening rupee is going to support exports going forward. So we are also in discussion with all the OEMs and distributors in the exports business. And going forward, we expect the businesses should improve in exports.
Got it. Thanks. I'll fall back in queue.
Thank you. We have the next question from the line of Abhishek Ghosh from DSP Mutual Fund. Please go ahead.
Yeah, hi sir. Thanks for the opportunity. So just a couple of questions. Is the entire gross margin improvement that one has seen in the current quarter is due to that one-time settlement, or is there some amount of, as steel prices have corrected, there's some benefit of that as well?
So it's a combination of one-time settlement as well as we improve the share of business as well as the weakening rupee. It's a combination of all, and we are confident that we steady state whatever we are maintaining that will continue.
Okay. Okay. And sir, the other thing is, steel price, we have seen much sharper decline, while the commensurate revenues have been, if one looks at on a sequential basis, have seen very marginal decline. So if you can help us with volume growth, that will be helpful, sir.
It is about we have about let's say volume growth of about 20% in engineering division and about 12% in MFPD. Yeah. And the cycle business, there is a decline in the volume. This is a majority of business.
Okay, got it. And so just one last question. In terms of if you look at the overall cash flow as far as console is concerned, standalone you are clocking almost about 500-600 crores of cash flow at this point in time. And on a console basis, the cash flow is in excess of 1,000 odd crores. So how should we look at the capital allocation perspective from here on, given the cash flow generation is very strong and given that all those adversities in terms of crisis and other things seems to be behind? So how should we look at, going forward when there is so much of cash flow generation? How should one look at the capital allocation, if you can help us with that? Thanks.
So, Abhishek, I think kind of directionally we've been steering and kind of been indicating how we're kind of using this, and nothing is changing with that approach, right? See, broadly, when you look at the console cash flow, basically the cash flow, you should still see TI and CG as two independent entities. Obviously, there will, I don't want to make any forward-looking statements, but, kind of both companies have a dividend policy. So the way to look at TI is that TI has TI's own cash flow plus any dividends received from CG, right? And then, what we've kind of articulated in CG is that dividends received from CG and Shanti. And what we've articulated is that CG might start pursuing its own CG1, CG2, CG3 at some point in time, right? But then you have an amount that comes to TI, which is basically TI's own free cash plus the dividends it receives from those two entities. Using that, we've been articulate about how we're deploying that free cash, and that is to kind of drive the growth in the new ventures, either be it, now it's shifted a bit more to TI2, whether it's we've been kind of fairly active in the electric vehicle space. We've announced 2 or 3 sectors that we're quite interested in. That's where most of the capital will continue to get deployed. And the principles kind of continue to be the same principles that we've articulated for at least the last 3 years, right, in terms of how we will deploy that capital and kind of, and the amount of debt we'll be willing to take and all of that. So nothing's changing from that perspective.
Okay. So just one thing.
We're deploying the capital basically towards these new businesses and the growth in the new businesses.
Fair. So, sir, as we have seen, large part of the capital, at least in the TI2, has now gone into EV in last 1 year or so. But you also made some small, acquisitions in electronics and medical. So, incrementally from here on, should we expect the thrust to move towards those two new sectors as well? Is that a right understanding? Just looking at the opportunities available.
Yeah, I think that is fair. I think that's fair. That's fair.
Okay, sir. I have a few more questions. I'll come back in the queue. Thank you so much.
Okay, thanks, Abhishek.
Thank you. We have the next question from the line of Anika Mittal from Invest Research. Please go ahead.
Sir, is there any update regarding acquisition for foray into medical device segment?
Yeah, so like we said, we'll only kind of discuss it. I mean, there are potential kind of targets in the pipeline in that business. We'll only discuss it once we have something definitive to talk about.
Okay, sir. Thank you.
Thank you. We have the next question from the line of Nishit Jalan from Axis Capital. Please go ahead.
Yeah, hi sir. Thank you for the opportunity. I have two questions.
Hi.
Firstly, on the new EV businesses, if you can give us an update in terms of the timeline of launches that we are looking at, especially on the tractor and the truck side, and what kind of response you have got for three-wheelers, electric three-wheelers that you have launched, and any details in terms of distribution network that you have set up, capacity, or the monthly production that you are looking at. So first question is a broader question on the EV portfolio that we are looking to create. Second question is a follow-up on the engineering segment. You mentioned that there was a one-time settlement which was done. So just wanted to understand, so there will be a lot of amounts which will pertain to the previous quarter's price increases that would have come in this quarter also. So just wanted to understand what is that number so that we can understand what is the underlying profitability for this quarter, which may be more sustainable. Thank you so much.
Okay, so first on EV. So just to give you a sense, like the response on three-wheeler has been very positive. I think kind of a lot of good feedback, both on traditional and on social media channels. So I think the proof of the pudding is really kind of what's going to happen in sales and profitability. So that we will start, because December basically we will start selling vehicles in the market. So just your question on distribution, we've started off with 40 dealers, and that is we want to keep it tight in the beginning. We've had tremendous interest in potential new dealerships, but we're basically going to keep it tight in the beginning, kind of drive our sales through 40 dealerships, and then look at a broader expansion based on the success and ensuring that we get the model right with the first 40 dealerships. So that is on three-wheeler. The second launch will actually be on the heavy commercial vehicles, where basically we will start selling a limited number of trucks, right? Maybe like 30 a month or so. In the next, I would say actually starting again in December, we should start selling about between 30 and 50 trucks a month. There also there's been tremendous response in terms of the interest in the product. There it looks like we will be a bit more supply constrained initially. We are working on a new facility that we hope to be ready in the first quarter of 2024. Financial year 2024, and therefore we might have a more formal launch in the final quarter of this year, once we know that we're going to be able to produce it at higher volumes. That is for this thing. And then tractor, we're really anticipating kind of a launch either in the last quarter this year, of the smallest tractor, right? So kind of, we'll basically start off with what I would think of as a very small tractor, which has very niche use cases, right? And that might launch, either in the last quarter of, it might push to first quarter of 2024 again. So that's when kind of we're basically looking at launches for these three products. financial year 2024. Okay? And which would basically mean April, May, June. It might be before that, but so that's basically kind of what we're looking at for timeline. That was on electric. You also had a question on engineering. The question. I think we already answered that. Yeah, we already answered that question. Basically, I think you're asking more specifically for what is an amount that you can use as PBT to sales for engineering. I don't think we'll give guidance to that specific level. In general, like we've told you where we are going on each of the businesses, right? Which is like, we want to push them over a 3-year time frame to a higher number than we are today. So some of that evidence you're seeing playing out, but there's still more work to be done there.
Sir, I was not asking for a specific guidance. I was just asking for this quarter, what.
Yeah, you're asking exactly how much is attributable to the one-time settlement, which is in a sense asking the same thing, right? That's what I was saying. We're not going to give kind of exact numbers saying here's how much is kind of due to the one-time settlement.
Also, we mentioned that it is a not function of only customer and supplier settlement. It is a combination of maybe, let's say, rupee weakening, and we gained some share of business and some mix improvement.
Yeah.
So it's a combination of 3-4 things which has resulted into this. Just we updated in the last call.
Thank you. Ladies and gentlemen, as the line of the current participant has got disconnected, we move on to the next participant. And the question is from the line of Raj Rishi from DCPL. Please go ahead. Mr. Raj Rishi, I have unmuted your line. Kindly proceed with your question. Mr. Raj Rishi, we are not able to hear you. Kindly use your handset. As the current participant is not answering, we move on to the next participant. We have the line of Mr. Nishit Jalan again connected. Mr. Jalan, please proceed with your question.
Yeah, sorry, I got disconnected. I don't know if you answered the question. So my the only point I was trying to ask was, what was the number in this quarter in terms of price increases that we got for previous quarters? I was not asking for any forward guidance, so that is the only point I was asking if you can answer. And secondly, I have a follow-up on electric three-wheeler launch. Like you talked about electric trucks, we are looking at 30 to 50 units per month. Any such target, or what kind of numbers would you be looking at electric three-wheelers? And I would assume that initially you are starting with the southern states, so all the dealers, 40 dealers are pertaining to southern states. Is that understanding correct?
So again, we won't give specific guidance on what we're looking at for electric three-wheelers. Basically this is going to be it's a very different product from the truck, and so it's going to depend on what kind of consumer demand we see. To your question on which states, I think you asked was the second part of your question, Nishit. Paul, can you just kind of answer which states we're going to initially?
I think initially we are going for around the 3,000 states, Tamil Nadu, Kerala, AP, and Telangana. These are the 4 states that we are planning, and gradually, as we move into the first quarter of next year, then we will be looking at different other states as we move forward.
So Nishit, hopefully that answers both your questions.
Yes, thank you so much.
Okay, thank you.
Thank you. A reminder to all the participants, anyone who wishes to ask a question may please press star and 1 on their touchtone phone. The next question is from the line of Arman Agarwal from Carnelian Capital. Please go ahead.
Good morning, sir. Thanks for the opportunity. Just one question from my side. So on this, if I see this mobility segment, so between a standalone and console statement, there is a charge of 24 crores. So just wanted to understand what this is relating to. Is it relating to our EV initiatives, which we are spending right now? And just an idea like how this could move in future.
Yeah, so we talked about that. That is for the Sri Lankan subsidiaries. Oh.
So I'm not talking about the extraordinary charge. I'm talking about the EVIT of the mobility business.
Mobility, are you talking about clean mobility or are you talking about overall mobility?
Sir, if I see a standalone statement, you have...
Okay, one second. Mayappan will answer it.
Yeah, this is Mayappan. Yes, actually, I think you are asking about the mobility segment profitability in standalone and the consolidated, why it is different. Okay, that includes the TI CMPL also, TI Clean Mobility. TI Clean Mobility has incurred a loss in this quarter. That's why that got adjusted in this mobility segment. That's the difference between that. Nothing else.
Okay. And so this is relating to the three-wheeler business, right? The console charge.
Okay, I'll tell you what. I think I understand where your confusion is coming from, Aman. So what we will look at is whether we separate out mobility and clean mobility into two separate tracks, right? Because that might create confusion in the system. So I think that's fair. We'll think through that in our report.
Yeah, sure. Thank you for that. This was my question. Thank you.
Thank you. We have the next question from the line of Jitendra Khatri from Tata AMC. Please go ahead.
Yeah, sir, can you hear me?
Please proceed.
Yeah, thank you. Sir, I wanted to know what would be your possible market share in some of the key, large divisions of business, if you can share that, like tube products or auto chains or fine blanking.
Yeah, we've not shared specific market share data in anything. I mean, we have fairly good market share positions in our businesses, but we've not shared specific numbers in anything.
Okay. Thank you.
Yeah. Thank you.
Yeah.
Thank you. We have the next question from the line of Sonal Gupta from L&T Mutual Fund. Please go ahead.
Yeah, hi, good morning, and thanks for taking my question. So just wanted to understand in terms of the EV, on the EV side, I mean, given that we've seen a very sharp spike in battery commodity prices and they seem to be still going up, I mean, how are you looking at the sourcing and procurement process, and overall, does that change the equation in economics for you?
Yeah, I think that's a great question, right? Basically, EV, battery that used to be 40% is now 50% of the cost of these vehicles, pretty much. And so that's actually where we've been spending a fair amount of time. Right now, like you probably know, most of the cells end up coming from China, though there are more expensive manufacturers in Japan and Korea as well. So what we're thinking through there is more of a longer-term strategy on battery, whether we can, whether we have to clearly the cells is not a business that we're interested in. And, I think the track for cells is going to be that, currently all the cells are getting imported in India. With the PLI that's gotten announced and, Reliance and a bunch of others have won that PLI, it looks like there will be cell manufacturing capacity that comes to India in the long term. And we're beginning to work with some of those partners as well, so that they can be long-term suppliers of cells for us. Then beyond the cells, you've got packing and the BMS. And those are areas where, currently we are outsourcing, but we do believe that we will need to develop capabilities over time. So that's something that we've started investing in from an R&D perspective, so that we understand what the capability to do to bring some of that, because definitely that's going to drive I think as far as, like you correctly said, a lot of whether guys win an EV or not is going to be driven by their battery strategy, right? Because battery is 50% of the cost and it drives huge competitive advantage. So then if you break down the battery strategy, as far as we're concerned, it's how effectively can we source the cells, which is one area we're very focused on. Both, basically by developing a lot more capability for it in China and currently in China, and then obviously that has to transition to India over the medium term. And then working on the technology, which we currently outsource for packing and for BMS, and whether we bring those two in-house, I think is a valid question that we will be able to answer more articulately for each of the product lines within the next, I would say, 3 to 6 months.
Got it. Got it. No, so what I was trying to understand is that, given that initially, I mean, I do understand that, I mean, like, getting into cell manufacturing is a completely different ballgame. And anyway, that was not my question. I'm just trying to understand, like, given the increasing price of cells, do we, I mean, like, is that changing your business plan a bit, or you still see the TCO is sort of very favorable?
No, there's no change in business plan because commodity prices are increasing. I think that will continue to kind of happen through the cycle. But if you actually look at it, in the same point that commodity prices are increasing, kind of, fuel prices are increasing as well, right? So actually, when you begin to look at these things from a TCO perspective, there's not too much of a difference in the math. If you were planning on kind of doing something at, a cost of diesel of, 80 rupees and now it's 100 rupees, obviously that kind of changes your benefit that you get from a transition to EV as well. So I would say that you can't just look at commodity prices for batteries in isolation. And as a result, it doesn't mean kind of any significant changes in our plan.
Got it. And just related to that, I'm not sure if there is any FAME subsidy for like heavy commercial vehicles or tractors, etc.
Yeah.
So,
basically, these are conversations we have started with the government, and it's kind of curious to us also why there's no FAME for heavy commercial vehicles. We're in active conversations with the government on this, right? Because obviously the government also kind of agrees that. I shouldn't say the government agrees, and that's a very broad statement, but I'm just saying kind of there's general openness to discussion on, whether there should be FAME for heavy commercial vehicles and tractors. So both of those are conversations that we're in the government with, we're having with the government right now.
Got it. And on the three-wheelers, you will be, I'm not sure, you will be compliant and you will get some FAME subsidy, right?
Yes, for three-wheeler we will get FAME subsidy.
That's about what, 15,000 per kilowatt, or I mean that's for the three-wheelers, actually 10,000.
Do you know what it is per kilowatt?
Yeah.
I thought it was 10,000 per kilowatt.
Yeah.
I thought it was 10,000. Is it now 15,000 per kilowatt?
No, that's for two-wheelers. Sorry, my bad.
It's 10,000 per kilowatt.
Got it. Great. Thank you so much. Yeah.
All right. Super.
We have the next question from the line of Vinod Malviya from Union Mutual Fund. Please go ahead.
Thank you for taking my question, sir. So I just had one question. You've given a very good roadmap for your foray into the electric vehicle side. Can you also give what kind of capital commitment you are planning to make on the three-wheeler electric side? We have trucks and the tractor side over the next 1 year.
Yeah, so I think the capital commitments, we kind of articulated what the first go-around was, right? So for three-wheeler, let's say quite a bit of the capital has already been incurred. So I think on specific numbers, we might give better guidance, in the next 3 months. But a large part of the capital has already gotten incurred for both three-wheeler and for tractor. So there is factory build-out, some of it is required for tractor. And for three-wheeler, the factory build-out obviously is complete. And we're starting production kind of fairly quickly. But we'll give you more specific numbers in the next earnings call.
Okay, and on the truck side?
That's what I'm saying. The trucks, the factory build out. There's the first factory we're building out. So we'll articulate a clearer strategy in terms of what we're doing with the first factory, how much capacity we're going to build there, and how that capacity build is going to look over time in the next earnings call.
Okay. Thank you. That's all from me. Thank you.
Thank you. We have the next question from the line of Abhishek Ghosh from DSP Mutual Fund. That would be a follow-up question. Please go ahead.
Hey, Abhishek.
Yeah, hi, sir. Thank you so much for the opportunity again. So just a couple of things, just read through from the annual report. You've mentioned that, you're looking at products for import substitution and expansion of geography. So just was curious to understand this import substitution you're referring to, the auto segment itself, or is it like across multiple sectors? How should one look at it, just to understand the market size opportunity from that perspective?
Basically, import substitution we are looking for engineering division in the tubes as well as CRS's business, because we have studied and we find that a lot of special strips as well as some tube segments are getting still imported in the country. So we are working on how to substitute that, particularly in TI.
And the broader thing on import substitution has also been most of the TI2 strategy is driven by that, right?
Yeah.
So we take medicals, we take electronics, all of these things. That whole strategy is driven by these kinds of things.
Correct. I was trying to understand, is it only related to that, or is it beyond that also? Is it more related to the current imports that you already do in TI1? So that's helpful. Sir,
so that's right. Like Mukesh said, it is TI1 also. So everybody is beginning to think of the same thing.
Correct. That's clear. So the other thing is, if you look at broadly, again in the annual report, broadly what we understand is you've put broadly 3 to 4 newer factories, both in engineering division and the mobility division. But TI1 seems to be coming back in terms of overall volume growth now, things having stabilized. Engineering division is already at 20% of exports. So you think at some point the TI1 capex will also have to be ramped up significantly? Is that a thought or strategy in mind?
Abhishek, I don't know if it's a problem with us, but we seem to be kind of losing. Yeah.
It's
a problem here.
Sorry. Hello. Am I not audible? Hello.
Last part of your question, please. Again.
Okay, sir. Okay, so where I was coming from, sir, that you have put about, I think, 3 to 4 newer factories, or in both in terms of brownfield and greenfield in the last 1.5 year, and that should drive some amount of growth. But now I think the TI1 seems to be stabilizing well, because auto numbers are coming up well. Your export piece is doing well. Engineering, you're almost doing 20% of exports now, which was sub 10% few years back. So you think the TI1 capex also needs to be increased from here on, was my question. Till now we were more focused on...
Yeah, so Abhishek, yes, TI1 capex is going up. But when we think of the free cash we're generating, that free cash is after TI1 has incurred its capex, right? So we always think of the free cash at a company level. We put away the fact that, this much is required to drive the growth in TI1 itself. And that is already included in kind of the cash flow the company has to generate. So engineering, for example, has to generate that free cash after investing in the capex that's required for its own growth.
Okay. So, and you don't think there is a substantial increase, whatever they will generate extra cash flow will keep flowing back into the business. That's the way you're looking at each SBU.
Correct.
Okay. And so just one last thing, if you can help us understand with the status of the, the LEAP program which you have started, have you already started to see benefits of that in the numbers, or going forward? Just some thoughts that will be helpful, sir. Thanks.
Yes, we started this journey about maybe, let's say, 9 months back, and we are able to see initial benefits popping up, but we feel as a company it's a long way to go, because it's a exercise which is maybe we should feel about 3 years exercise, which is basically a cultural change in how do we push down the responsibility at the last level in the organization by becoming more and more lean in terms of the way we operate. So the journey is continuing, but initial benefit has already started flowing in, which is reflected in the results also.
Great. Thank you so much for answering my questions, and wish you all the best.
Thanks, Abhishek.
Thank you. We have the next question from the line of Niket from Motilal Oswal AMC. Please go ahead.
Yeah, thanks for the opportunity. Hi, thanks for the opportunity. I just joined a bit late, so I'm not... Hi, Valan. So just 2-3 questions. One is if you can just talk a bit on the financing part for these EV vehicles. How will that ecosystem really work for all the 3 verticals, which is tractor?
Yeah. Okay, Niket. So thanks for the question. Sorry, did you have more to the question, Niket?
So sorry to inform you, sir. The line has got disconnected from Mr. Niket. If he gets connected again, I'll take him in the queue, sir. We'll move on to the next participant. The name is Mr. Prithvi from Unifi Capital. Please go ahead.
Sir, I just have a couple of questions. In the first question, on the EV side, at what revenue level, will the company reach breakeven?
EV. So I would think of it as kind of, each of the individual businesses will start breaking even at different points in time. I would think that we've got to get to, it's obviously kind of, I think the tractor is a bit kind of difficult to predict right now. But trucks, I would think that it will be in just a bit over kind of 1,000 crores a year is where trucks would break even, and for the three-wheelers, I think the number could be similar, kind of I think somewhere in 1,000 crore a year.
Okay, that's helpful. And just on your new segments, electronic devices or medical equipment that companies planning to enter. So, let's take a 5-year view. Any rough guidance on how much these new segments can be at consolidated revenue level?
No, I don't really. I think it doesn't make sense to give projections kind of, a 5-year view. But let's start the businesses. You don't want to put undue pressure on those businesses also to kind of build an expectation like that. We have some ingoing hypothesis, but we don't want to give any guidance on what that could be. First, let the businesses start and we'll look at it.
Okay, sir. Thanks a lot.
Thank you.
Thank you. We have the next question from the line of Anupam Gupta from IIFL Securities Limited. Please go ahead.
Hi, Anupam.
Yeah, hi, Vellayan. Just a few questions.
I'm sorry to interrupt, Mr. Gupta. You're sounding too distant.
Yeah, I hope this is better.
Yes.
Yeah.
So firstly, if I see engineering and metal form product business in this quarter, so engineering saw a Q-on-Q decline, whereas metal form saw a Q-on-Q improvement, and I think there was some PV obviously which played a role. But have you seen railways kicking in this quarter, or is there still some time that railways will come up for you in metal form?
Anupam is yet to kick in. Your observation is right. In coming quarters, we are expecting that will kick in.
Okay, understand. Secondly, Vellayan, can you talk about what's happening on the optic lens business? What's the progress there, and what sort of results have come out from the initial testing which you were doing?
I would still say it's slow, Anupam, slower than we expected. We have started basically. Now we're working on. With the first customer that we basically kind of have started production, we've got, I would say, 4 out of 6 processes validated. So we're still kind of validating a couple more processes before we can start scaling out any production with them. Clearly, the learning curve in the business is higher than what we expected it to be. But we're still on it. I would say that. My sense is it's taking more time than we expected for sure.
Okay, and just continuing there, is there any way that this can be integrated with the Moshine thing which you have acquired? Is any sort of integration possible there?
So in a sense, like management and leadership-wise, yes, there will be integration. But in terms of the operations, basically, it's 2 very different things, right? So kind of. These are glass lenses. Moshine predominantly is for the mobile phones, so they use plastic lenses. And what we will so that's the first thing, right? So kind of it's not like this product. The output of this product goes into Moshine, right? So that's not the case. Because these are glass and that's plastic. And the second is that over time there can be integration that will kind of happen, but I don't think that's kind of anything in the near term. Next year or 2, that's not going to happen.
Understand. And just one last question on the heavy commercial vehicles. So since you will be very close to launching, how does your product compare with a similar ICE product? Let's say in terms of tonnages and distance, and not distance, tonnages basically. How will it compare in terms of pricing and other features? And secondly, do you see significant competition also coming in the EV side? Are you seeing some sort of testing already at homologation stage or by other players?
So, in terms of the second question, as far as our understanding is that there does not seem to be too much that's at homologation stage right now, especially on a very heavy truck. Right? We can't see too much of that there. And the second question, in terms of, basically, you'll have to look at this at a TCO, from a TCO perspective, right? Because the maths is going to be, we're obviously going to be much more expensive than the ICE trucks of similar tonnages. But the maths is all going to be driven by TCO. And I would just say from TCO, the maths is fairly compelling as far as we can see. And initial conversations with customers also, they seem to agree. So it's going to be driven more by TCO discussion. I don't want to get into kind of what will the product pricing be at this stage. But obviously, it's just kind of suffice it to say that it's going to be significantly higher than the ICE price.
Sure. Okay. That's helpful. That's all from my side. Thank you.
Yeah. Thanks.
Thank you. We have the next question from the line of Vipul Kumar Shah from Sumangal Investment. Please go ahead.
Hi, sir. In the truck business, we'll be mostly in the medium and heavy trucks only, or we'll be introducing entire range of ICV and LCV also?
The stated strategy at this point is that we're in medium and heavy commercial vehicles.
Okay, sir. Thank you.
Thank you.
Thank you. We have a follow-up question from the line of Raj Rishi from DCPL. Please go ahead.
Yeah, hello.
Yeah, we're here.
Am I audible?
Please proceed, Mr. Raj Rishi.
Hi. Just wanted to ask, you've done a fantastic job with the acquisition of CG Power. And the kind of opportunities it is perceived in, electronics, mobiles, and medical devices, etc., which you have also elaborated about. Like what I understand is you issued the, shares to investors. You did a placement, and that was funding the acquisition of CG Power. So you have anything of that in, as a strategy?
No, so I think that we've discussed this in previous earnings calls, right? Basically, what happened was CG Power happened at the point of COVID, and I didn't want to put TI's balance sheet at any significant risk. So we basically raised, a small amount of capital at that point to offset the expense that came with CG Power, because it was in the middle of COVID and the environment was quite uncertain, right? Otherwise, I think that's the only time in TI's history that we've ever kind of raised money. And so it's not our stated intent to kind of raise at the parent company level, and use that as a mechanism for driving this growth at this point in time. We do believe that between the free cash and kind of other forms of generation, we should be able to generate enough cash to drive that growth.
Okay. And Mr. Velian, this kind of news articles that you read about Apple shifting significant production to India, and India emerging as an electronics hub, and you have also elaborated in the previous con call that 95% of the components in mobile, etc., is imported from China, and you think over the next decade that kind of ecosystem will be created here. So that presents unprecedented opportunity. That's how I understand it. Can you just elaborate your view?
Yeah, I agree. It's an unprecedented opportunity, so it's silly for us not to be very actively involved in. It's an area that we're spending a lot of time on. I'm beginning to think of how we can get involved. The only thing is that our whole approach to some of these things is to kind of patience, because we're looking at kind of, how we build it out over the next 10 to 15 years. We're not that concerned about, doing something immediately tomorrow. But it's an area we're spending significant time on, and I do feel like it will begin to yield results over time.
Okay. Just another thing, there's talk about Tata's tying up with Wistron, etc., for production of Apple phones. So you would be interested, your focus is what, components or something like mobile manufacture itself? If you can.
See, at this stage, our larger interest is components. If something significant on the assembly side, offers itself. See, our concern with assembly is that we didn't want to get into kind of caught in a very low margin business, right? So I think assembly will depend on the nature of the opportunity in that segment, right? Unless it kind of gave us some understanding or path that will allow us to kind of improve the margins in the business. That's where we see something that requires more intellectual property, and R&D, which will be more on the component side, will therefore kind of be able to afford a higher margin business, and that's what kind of our initial focus continues to be.
Okay. Thanks a lot. Thank you.
Okay, thank you.
Before we take the next question, a reminder to all the participants. Anyone who wishes to ask a question may please press star and one on their touchtone phone. We have the line of Mr. Niket connected again from Motilal Oswal AMC. Please go ahead, Mr. Niket.
Thanks. Just one question. If you can just highlight how are you looking at the financing part for all the three EV verticals that we have?
Yeah, so obviously the financing strategy will be different. In three-wheeler, we've got 3 tie-ups right now with 3 financiers already, and we're looking at developing a couple more. That includes banks and NBFCs. On the truck side, we have 1 tie-up in place, and we're looking at developing 2 more. Trucks, we're thinking, will be more driven by banks, though some NBFCs are active. Because of the rates at which some of these trucks go, it's more driven by the larger fleets are all catered to by banks. And tractor also, we started talking. I think we have 2 relationships in place. And again, it'll be a combination of banks and NBFCs because both are fairly active in the tractor market.
Got it. And how much benefit does it bring to our EV business of having multiple businesses in-house? Like, for example, you do door panels in-house, you also have industrial chains, auto chains, and then you also have Chola, then you have EV motors. So how much benefit on cost does it bring to Tube vis-a-vis a competitor trying to make a similar product?
Yes, I would say that there is some benefit. I don't know how much of that benefit is a cost benefit, Niket. It's being able to take product to market more quickly is the way I would look at it. Okay. The way you have to really look at electric is the whole first generation of electric product we're doing. We're basically outsourcing, obviously, everything, right? Because a lot of the capabilities we don't have in-house, right? Even if you see motors, everything has been outsourced in the first generation of what we do. What we have to begin to look at over time, and that's where now we're kind of significantly upping our R&D spend, is to see what we start developing more specific capability on, so that for Gen 2 of all the electric products, there is more of what we have introduced into the mix, right? And I would say the more of what we have can fall into different categories, some of which is product, but some of which is capabilities we don't have today. Somebody asked about battery, right? We'll have to look at that, right? Another huge area is just software, right? There's more and more software going to vehicles, and how we develop more capabilities on that. So all of those kinds of things are all going to be part of Gen 2 of the vehicles. Gen 1, I would say the advantage from some of these things is still a bit more limited at this stage. But we definitely see it as something that will help our competitiveness once we go forward.
Got it. And one more question, if I may squeeze in. Would you be also open to look at some of the tie-ups? Because as you rightly said, on the battery side, some of these are far critical elements of the EV piece. So say someone like a BYD or any other company within China or anywhere in the world, which doesn't have tie-up in spaces that you are present, will you be open to that, or do you think that the outsourcing model works relatively better rather than having a joint venture kind of a model?
No, I mean, we are definitely open to it, right? So I definitely think that. So the short answer, Niket, is that we are open to that. But I don't know if BYD is the right answer, because BYD kind of makes their own product as well, right? And is looking at kind of potentially coming in. The second thing is that, it appears that the government is fairly clear that they don't want majority Chinese ownership in a lot of these things.
Right. No, perfect, sir. Thank you and best of luck and congrats on a good quarter.
Thank you.
Thank you. We have the next question from the line of Raj Shah from Marcellus Investment Managers. Please go ahead.
Yeah.
Hey, Raj.
Am I audible? Yeah. Hi. Am I audible?
Yes. Please proceed.
Yeah. So, as you mentioned, sir, about the optical lens business, that learning curve has been steep and longer than expected. I just wanted to know your view on the TMT bars business. How has been the journey and what are the learnings from this kind of businesses?
Yeah, so TMT bars is another one where basically, I think the basic focus has been kind of what it would take to differentiate in a commodity product, right? Because if a product kind of sticks predominantly as commodity, it's more difficult for us to participate in that business in the long term. So that's where I'd say the biggest learning curve has been, right? Which is that though there are real product differences we can create, the ability to get the market to understand those product differences is a bit more challenged, right? And so that's, I would say, kind of our biggest learning from that business, where we continue to kind of invest in getting the market to value that differentiation. The reality of what the market is absorbing is different.
So the line of the participant has got disconnected. Ladies and gentlemen, that was the last question that the management could answer. I would now like to hand the conference over to the management for closing comments.
Nothing specific from our side. I will hand back to you.
Thank you. On behalf of IIFL Securities Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you. Thanks so much.
Thank you.
Thank you.